Good morning, traders. Richard here doing a quick point and figure chart analysis of the Nasdaq 100 index in view of the Fed's decision to keep rates unchanged and pivot with rate cuts next year. We've got a whole bunch of new upside point and figure chart targets in the market, but let's just take a step back and see where the current rally started back here. In October, we've got the support here between the cluster of the 30-day and the 34th day exponential moving average on the point and figure chart. We got our reversal. There was a buy signal there at 14,300 with the upside reversal. Then we had a strong rally, and at this point when the index broke past, let me just put a target in there. When the index broke past these critical levels there at 15,000, it activated the 15,700 upside point to figure target, which was met soon after that. We then had a strong rally, broke past that high there at 15.6. That activated the 16,100 upside point to figure target, and we met that as well. And this move here has activated the 16,700 upside target there. So there's two upside targets still to go, 16.7 and then a whopping 21. But we'll look at that one, 20,100. We'll look at that in a minute. But so when we got to this point here, we had a reversal to the downside, which was the profit taking for this particular move. In the index, for example, and then we got another reversal to the upside. It came back to test this 15,000 breakout for support, and then had another upside buy signal at 15,800, and that one is still long on the index on that level. Took out the 16,400 upside target. Now if we want to project a few more targets here, we can look at these significant highs here, and we can add another one over here. So of the current rally, the high and low 100 by 3 point and figure chart, which means every box size is 100 points and a reversal is 3. So yeah, we had a 300 point reversal to the upside, and as long as the market keeps grinding higher, we don't get a 300 point reversal to the downside, we're still on track to meet these upside targets. So the next target to look out for is 16,700 and then 17,000. We then should see some form of a consolidation, but we can look at this move and project it from this low to the upside, and that might just bring us back up to about, let me just see quickly, just under the 18,000. 18,200 would be the next upside target from that zone. But beware, we can still see a little bit of resistance coming in from these highs there. That 16,700, that's a resistance target there, so we'll revisit the analysis for these upside targets, but there's two long-term targets of 18,200 and 20,100 to the upside. But so far, looking for the 17,000 and 16,700 upside targets over the medium term in this current rally. Just remember now, a 300 point move to the downside will signal the end of the current rally. But so far so good. Nice breakout, 16,700 and 17,000 as the next upside targets in the index. If we just cross-reference our the point and figure chart using the high and low method, we're now looking at from a log chart, 1% by 3 point and figure chart, a log scale point and figure chart basically. And the upside point and figure charts here, we can see there after reversal there, we've got 16,343 upside target was met, the 16,506 upside target was met, and now the next target is 16,838 to the upside. Now on top of this one, if we add a up target there, we can see there's a 21,800 target, but I don't think we'll get there in this month, but that's a long-term target there on the daily. So at some point we might get to that level. Now things to watch out for, we've got this resistance zone to deal with. Any breakout past this resistance zone would then keep that target in mind to the upside, but there's significant consolidation risk just to digest this move, as well as to break past these highs over there. Now things to watch out for, any kind of reversal to the downside will signal the end of this current trend, and a point and figure chart reversal to the downside will obviously generate a sell signal. The other target to keep an eye on is 17,176 from a 1% log scale point of figure chart. So 17,000 seems to be a nice number to be testing. Maybe the Santa Claus rally and the January rally will get us there before we get a February, March correction in the market, the downside consolidation of this particular move. But so far so good. Fantastic rebound from these 13-day exponential moving average between the 13 and 20, as well as the significant lows there. Fantastic rebound in the market. Now if we just take a look at this the 4-hour pointer figure chart and the 60-minute one, you can see now solid uptrend. 16450 was taken out. The 16650 is the next one to look at. 162 and 166, these are all upside targets on the 4-hour pointer figure chart. And then if we look at the 60-minute one, took out a couple of targets here. 6150, nice rebound here from the 21-day exponential moving average on the pointer figure. And now we've got a couple other targets to keep in mind on the hourly one. Put that one in there. So the upside targets on the hourly is between 16,550, 16,850 and 1702. So keep that in mind. But watch out for any kind of reversal to the downside. That would be a 75-point reversal to the downside on the 60-minute, would signal the consolidation, the end of the current trend. But so far so good. Fantastic rebound from a cluster of support levels. Let's go back to the daily. Keep an eye on 16,700 and 17,000 as the next upside point and figure chart targets. Until next time, happy point and figure chart trading. Bye for now.